Hey, good morning, everyone, and welcome to this morning's edition of the Coffee Microcaps Appendix 4C results wrap. You're very welcome. It's been our first online event now in a while, but we're going to be ramping up now today, tomorrow, and of course, as we progress through August and full year results are coming out. I've got a quick couple of intro slides, and then we're going to get straight into it with our first presenter. For anybody who's joining us for the first time, my name is Mark Tobin. I'm the founder of Coffee Microcaps. You're all very welcome. If you're first time here, or if you are indeed a returning guest. And I'd also like to make special mention of our new sponsor, ShareSite. It's actually a piece of software platform I use myself. If you are looking for something to track your investments, I'd highly recommend looking at the ShareSite website for more information on what they offer. Quick compliance and disclaimer slide. Companies that we have presenting on here normally capped under 300 million in revenue and approaching cash flow break even are indeed are profitable. We generally don't have companies from the resources sector or biotech. So what I like to call industrial microcaps, which kind of encompasses the other major sectors that would be on the stock exchange. Structured this morning's webinar, we've got two companies presenting over the next hour, 30 minutes each, which we're going to break down into a 20-minute presentation and 10 minutes of Q&A. If you do have any questions, please type them in the Q&A box rather than the chat function. Just makes it easier for me to moderate the questions to our presenters. And please note the webinar is being recorded and will be posted on the Coffee Microcaps YouTube channel on Wednesday. You can follow us pretty much on all the socials, Twitter, YouTube, as I said, for the recording of this, and indeed all our previous presentations. We've got over 100 company presentations up there now. LinkedIn, and I also write a free monthly newsletter, which will be coming out later in the week, which you can get on the Substack platform. We've got two returning presenters this morning, I'm delighted to say. We've got Oleg, Vornik, CEO of Droneshield, who's going to be up first. And then we're going to cross over the Tasman to New Zealand, and we'll have Teri Thomas back with us from Volpara Health Technologies. And that's enough from me. I'm going to stop sharing my screen. And Oleg, if I can ask you to start sharing your screen, please.
Yeah. Thank you, Mark. And it's, good morning, everybody on the call and listening to the recording. Droneshield has released an all-time record results in the last week, and I'll talk to you today about it. We have announced a 8.2 million cash receipt quarter, which is our all-time high result, approximately triple of comparable quarter last year, which brings us to the total cash receipts for the half a year. We run on December year end of approximately $15.3 million. To give you a sense of comparison, that's almost entirely the amount of cash receipts for all of 2022. Importantly, this month, we have announced a $33 million record order from the US government for our counter-drone devices that we expect to get fully delivered and paid before the end of the year, as well as a $9.9 million 2-year electronic warfare R&D contract that we already got paid a bit over $2 million on, and we expect another meaningful milestone payment before the end of this year, as well as a $2.4 million R&D tax incentive as cash payment in the current quarter. If you add all of these numbers up, you'll see a very meaningful year this year as the business truly accelerates, with the total revenue being multiples of last year's revenue, which was a record of its own. Droneshield has a strong cash balance of about $42 million as of 30th of June. We have pretty simple balance sheet. There's no debt or convertibles. We're now seeing a record $62 million contracted backlog with a pipeline of over $200 million across about 80 projects across different products, different customers, and geographies. Several months ago, we have started a $65 million inventory build, which is almost complete. Some of this, or a lot of this, will go towards the $33 million contract that we announced this month, but also we have more to spare for other contracts we are anticipating in the near term. Speaking of near-term outlook, late last year, we were recommended for a rollout across the US Department of Defense bases. We are one of 3 consortia that won the process, and we expect orders to begin before the end of December. On the last point on the slide, Ukraine is a tragedy, but as much as it is what it is, we have been seeing that really highlight the need for both drones and counter-drone equipment on the battlefield. Military is only one of several applications for our equipment. However, the use of drones in war, small drones in war, so whether it's delivery of payloads, whether it's scouting the battlefield or other applications, we're seeing militaries and government agencies around the world starting to significantly ramp up the expenditure for both drones and counter-drone solutions, and Droneshield, as the world leader in that space, has been benefiting from that. Slide 3 talks a little bit about our history and also to those who are relatively new to our story. We think of the first few years, so we're an 8-year-old business, as setting the foundation. We did the IPO in 2016, which enabled us funds to do the initial development of the product, past the acoustic sensors, which we had at the time, building out the commercial and operational teams, and really starting to take hold in the market, which was nascent at the time. The hardest thing back then was trying to convince customers that they needed counter-drone equipment. Questions would get as well, small drones, that's what you buy kids for Christmas, right? And we'd try to explain that, yes, but you can also use them as effective platforms to deliver contraband to prisons, drugs across borders, create havoc across airports, as for example, if a plane ingests a drone into its engine, there have been studies showing the blowout of the engine. So those engines been designed to withstand bird strikes, but not encounters with drones carrying lithium-ion batteries and metal parts, and also, of course, in warfare. Then, as the market started to heat up in the last several years, we're starting to see what we call green shoots within the business, where we went from demos and smaller $100,000 to $200,000 sales to multiple $1 million plus orders. We've done larger capital raises also around that time to really capitalize on what we're seeing as the rising environment for counter-drone, and completed the product lineup. So truly, at that point, we're starting to have 3 families of products being dismounted or handheld, vehicle or ship, and fixed site systems. We also grew our team to approximately 60 across our Sydney and Virginia offices at that time. Then this year, assisted by the war in Ukraine, but also generally more and more drones taking up to the skies, and with it all the nefarious applications, we started seeing the fruits of our labor really paying off with those large contracts that I mentioned. We've undertaken a large capital raise, so there are no intentions for capital raises going forward for foreseeable future, as we are well funded. We grew to about 85 staff, which we expect to be sufficient for our near-term requirements, and now the hiring is more on an opportunistic basis. And the game for us is to deliver on the existing backlog while continuing to secure large contracts. In terms of the operational side of things, we're in the process of moving to a larger facility in Sydney, about 2.5 times the footprint of the existing facility. And also we work with a number of partners, our supply chain partners throughout Australia and elsewhere. And for example, for manufacturing, we do our own manufacturing as well as a couple of outsourced manufacturing partners, and they're scaling in turn as well to enable the jump to our 5-year target transformation of 300 to 500 million a year, and importantly, meaningful part of that revenue coming from software subscriptions. And I'll talk about the revenue models in a bit. Next slide, why invest in Droneshield? We are the only and remain the only publicly listed pure play counter drone company in the world. We are seeing increase in competitors. We have a number of unique differentiators. A lot of it is linked to us doing rapid innovation and having been in that space for longer than just about everybody else. but we continue being the only public listed player in this rapidly emerging space. We are AI-based platform, so there are several types of software subscriptions driven off AI that we're utilizing, and we introduced them about 2 years ago, and we expect the revenue from those to significantly increase. In 2022, the SaaS revenues were a bit under 10%, but as we keep going and keep having more devices receiving subscriptions out in the field, we expect that to keep increasing. Recurring customer revenue, I'll just take some of these given we have limited time. Defense and government sector by default are recurring kind of customers where start to finish, from the first handshake to the first order, could take a couple of years, which is largely what last several years have been about. But now, as we are seeing repeat increasing contracts from those customers, they're really recurring in nature because it's just as much of a hindrance for them to start with a new provider as it was initially to get us through the door. So very sticky customers, and sticky nature of revenues also being SaaS-based in addition to being hardware. Slide 6 has an image snapshot of our revenue and cash receipt growth. So you would have seen that 2023 cash receipts are already on par with the entire of last year's, and this is before taking into account the $33 million contract, which will be also added on top of that 15.3 million as we get it all delivered and paid for this year. A meaningful part of the $9.9 million contract that we announced early this month, and also other contracts, both in our existing backlog and new contracts that we expect to receive between now and the end of the year. I believe we're truly moving through a transformational phase in the business right now. For those relatively new to our story, to recap on why Droneshield exists, why is malicious use of drones a threat? So payload delivery, drones can be seen as a delivery platform, whether it's contraband, whether it's weapons, grenades, and so on. Intelligence gathering, whether it's competitor intelligence in the commercial space, or perhaps doing attack in the more of a warfare scenario, directing artillery strikes, for example. So one of the most terrifying things you see in Ukraine today is a drone buzzing overhead, not because of the small object that the drone itself is, but because it's likely to be transmitting what it's seeing back to the headquarters, back to its pilot, and then there's likely to be an artillery attack coming in the direction that the drone is looking at. Nuisance and disrupting airports I already mentioned, and then probably least seen dark side of drones being cyber and ransom attacks, where drones land on roofs of data centers or banks or other corporates or control decks of ships and use proximity to hack into wireless networks and conduct cyber and ransom attacks, $1 million in Bitcoin type ransom, or run the ship into the rocks in the next 24 hours. In terms of how we see our business, there are a couple of main strands to it. Counter-drone is the main part of our business and has always been. We also have an adjacent electronic warfare part of the business, and we expect to build more adjacencies over time. What I mean by adjacency is it's a kind of a skill set that we need for our counter-drone business anyway. The way I think about electronic warfare, it's detection of never seen before threats. And you can think of it as like detection of never seen before drones. So in terms of the teams working on those separate projects, counter-drone, electronic warfare, in terms of the learnings, there are a lot of synergies, and also they are long-term, or at least by our standards, a 2-year, $9.9 million contract. You have regular milestone payments, and it further helps to offset the somewhat lumpiness of the hardware revenues, and also we expect SaaS to keep smoothing out the lumpiness of the hardware revenues over time. 3 steps to counter-drone. Detection is always number one. People think of counter-drone as I'll just take down some of those drones, but you actually need to know that the drone is there, and we provide long-range detection and tracking capability. Step 2 is assessment. Usually a bigger drone means bigger problem. We can use our optical AI engines like what you're seeing in the top middle image to track the drone and identify it, identify the payload. Now, while detection and tracking of objects like humans and vehicles has been around for decades, doing that with drones, which are small dinner plate size objects flying against complex backgrounds like weaving between the buildings or natural obstacles, is actually pretty difficult. So what we developed, we believe, is fairly unique. Response is the third and the last step, and that largely depends on the use case. If you're in the military setting, you might want to get one of our drone guns out and put down the drone or swarm of drones. The effect is immediate. If you're in the prison setting, we can report to you in real time the location of the pilot and where the drone lands and which inmate picks up the package. So that way you can apprehend both parties involved and conduct investigation. I won't spend too much time on geopolitics. You would all be watching news and know what's going on. But the key theme is we're seeing record defense and security budgets. People are realizing that wars and conflicts are still a thing. You need to build up your defense capability, both as a deterrent and actually as something you need to use if you know, God forbid, you're in a situation where drones are attacking your assets. In the military speak, there's a saying, you have to fight the next war, not the last war, and the extensive use of drones in Ukraine will be in the defense textbooks for the next few decades. And it's really seen as the war of the future. So absolutely, large platforms like tanks and ships and so on are still the kings of the battlefield, but you need counter-drone systems as enabler of those exquisite platforms, as otherwise you might have a $5,000 drone blowing up a $5 million tank. The addressable market, we assess it at about 10 billion US. It's across a number of different customers. Today, military and government are majority of our revenues, but over time we expect civilian customers that we already have, but grow in dollar terms as far as airports, stadiums, special events, and so on go. Our product family, like I mentioned, 3 families of products. The handhelds, what you see in orange boxes in top left, being our drone guns. We now have 3. They each offer their own unique capabilities. And RF Patrol, which is a body-worn drone detector, completely passive, can give you the exact location of the drone and the pilot. Drone Sentry X, which is the vehicle and ship-based platform, integrated detection and defeat. And then Drone Sentry, which is our fixed site capability to detect, track, and also defeat drones. And then on the bottom in the black box, you see our SaaS offerings and long-term software subscription R&D type work. So aside from electronic warfare, we have 3 subscription or subscription-like products. So RF AI, so all of our radio frequency devices like RF Patrol, Drone Sentry X, and Drone Sentry, you can enroll to receive quarterly firmware updates, which is what you pay for, and you get the new version of the AI engine every quarter. And then for the customers that want our command and control system, Drone Sentry C2, that can also ingest data from RF Patrol, Drone Sentry X, and Drone Sentry, you pay that on a subscription basis. And also Drone Opt ID, the third SaaS stream, which is optical AI based for the fixed site systems that have cameras. Competitive analysis. So in the beginning, there was really not much of competition, and it was more about convincing customers they needed counter-drone. Today, it's more about differentiating ourselves from competition. Over last 8 years, with our present team of over 60 engineers, we developed a number of unique technical points of difference in terms of the range of detection, false alarms, effectiveness of mitigation, and also small features that customers like that took a lot of iteration. And also, we're not resting on our laurels. We're continuing to do regular hardware and software updates. On the commercial front, it takes years in the government space to build yourself to a position where you have all the right certifications, relationships, enrollments. You have the network of distributors in about 100 countries around the world. So training them, weeding them and replacing them if they're not performing. So all of that took a very long time. And in some ways, it's been lucky that in the early years, the industry, the whole counter-drone market was relatively slow, which enabled us time to build all of that up just as it's heating up now. I broadly categorize our competitors in two buckets. Most of them are US-based. That's our largest market, reflecting the fact that US is generally the largest market for defense and security. They are either integrators, so you see Anduril and Khaki on the screen, and then there are a bunch of people who are called individual sensor makers. Droneshield is both an integrator and a sensor maker. It's not easy. It's not as cheap as it possibly could be if we just adopted one or the other. But importantly, what it does is it enables us to generate as many deployments and collect as much revenue as possible. Two most common questions new customers ask is how much and who else is using it. So ability to offer full suite of own developed products and also be the integrator of third-party systems gives us that ability to sell to any customer. Say if you have an airport in Eastern Europe, we can deliver on that. If you have special forces requirements in the US, we can deliver on that. There is nobody else that has as much of width of scope as we do. The other thing I'd say about competitive analysis is the market is becoming large enough that you do not need to win every single project. We have a really good win rate, essentially close to 100% for the projects where we participate. And the biggest threat to us is actually not from competitors, but from the projects getting extended, postponed, and the like. But I would say that even with competitors being around as well, the market is becoming big enough to sustain quite a few players. And I will end on this last slide being our key priorities. So continue leadership in the counter-drone sector, grow adjacencies. We talked about electronic warfare, but there'll be other adjacencies like the work on our command and control systems, and grow SaaS to, as I was mentioning, our target being as close to 50% of total revenues as possible in the next 5 years. Thank you for your time, and I'll turn to Q&A.
Thanks, Oleg. I might just kick off with the first one here. If we look at that 5-year target, where you're talking about scaling up, the revenue side over the next 5 years, how should we think about, customer splits in that? How much do you think of that will be defense versus, some of the other applications that you talked about, and I think in that second or third last slide of, whether that's stadia, commercial ports, commercial airports, the more civilian type operations is kind of like a lot of technology, defense starts using it first, and then it like makes its way into the kind of everyday world that, we all kind of operate in.
Good question. Defense is indeed trailblazer for a lot of technologies. Like you look at internet, we expect defense to remain meaningful contributor, so probably close to half of total revenues in the next 5 years. However, we believe there will be events that will trigger airports to deploy counter-drone products en masse. So what's been happening so far is I think a lot of airports are trying to understand, well, who's exactly is up for payment for counter-drone systems at their facilities? Is that the government? Is that airports themselves? Is that potentially airlines contributing? There are regulatory factors that people are working through, but the case is clear. Any day we might have that tragic event where an airliner goes down because its engine have been blown up by a drone. And you're also seeing effects of delays. So, you read reports about major airports like Dubai, and for every minute that no plane can take off or land, we're talking millions in total cost. So a few $1 million counter-drone system at an airport like this is a no-brainer, given it's the cost of disruption from a single incident using drones. So we believe there will be events in the next couple of years that will contribute to mass rollout across airports. And the good thing about airports compared to, say, militaries is militaries are by nature secretive, while airports are freely sharing information with each other because they're not competing with each other in any way. So I think once you start seeing that ball rolling with them, that will continue. Prisons are actually pretty similar dynamic, and we feel we're pretty well positioned for both of those sectors. Stadiums are probably a little more of a complex thing because there are extra parties involved. Like in some situations at bigger games, you have federal authorities that protect stadiums. In other situations, it's more local security. But I believe we'll start seeing deployments there as well. So I would say defense will continue being the largest sector at roughly 50% in the next 5 years. But as we see total dollar volumes of the market and also our revenues increase as each year goes, the percentage and also the absolute dollar amount will increase from the non-military sectors.
And then just a question on the hardware, and this can be on the detection side or on the counter drone side itself. I presume there's software updates that are happening on a fairly regular basis. But in terms of the equipment replacement cycle, because that's also a revenue generator, you're deploying all this equipment now, but when are you actually going to be releasing the next model of this and the next model of that? Is it a 3 to 5 year lifespan, or if I'm sitting there, CEO say of an airport, okay, we're going to have a big fixed cost upfront investment now, but we're not going to need to make that for another 10 years. Just to give us a sense of, how that kind of recurring, if I can say recurring revenue from the replacement equipment cycle, like where does that fit into that 3 to 500 million?
3 to 5 years is pretty spot on. We normally release new hardware for each of our product lines roughly every 3 to 4 years. Now, the existing equipment will continue to work. There's really no expiry date as such, but it's a bit like, say, if you buy a laptop, in 3 to 5 years, your existing laptop will probably continue to be fine, but for a lot of, especially government-type customers, they'll upgrade to the latest because, well, that's just something that they're used to doing. Also, like you said, the software updates, we provide that on a quarterly basis. So both, whether you replace hardware or not, you'll continue receiving software updates if you've enrolled. But yes, I would see hardware upgrades being a meaningful part of our revenue stream. And also we're seeing some customers go for what you'd call drone detection as a service model. We're going through one particular large tender on this right now, where the customer says, I just want to lock in for 10 years for monthly type payments. And the package would include hardware with updates, with hardware upgrades halfway through, so approximately 5 years in, firmware updates every quarter, field support, installation, training, all of that stuff. And then in return, they're making monthly payments. So as a business, it's actually a pretty appealing proposition because you're moving further away from those lumpy cash flows.
Okay. And then obviously, the capital raise happened back in March, and you said there's been a proliferation of other competitors. Would acquisitions be something that would be on Droneshield's, I guess, radar in the next couple of years? Whether it's to buy a specific piece of technology from maybe more of a startup competitor, but that could integrate well into your product offering, or to get you into a particular market or a particular customer segment, or are you, as you say, the industry is growing so much that that kind of consolidation or acquisition thing isn't really going to be part of the Droneshield story?
We're continuing to look at potential bolt-on targets in a fairly disciplined manner. Like you said, Mark, the rationale for acquisition can be multiple, not just technology. And we do believe that we have the best technology in the market for drone detection and soft defeat. We don't do hard defeat like machine guns, remote weapon stations, lasers, and the like. For us, the market is fairly global. So we don't look only in Australia, but also in markets like the US. We want to make sure that when we acquire a company, it fits with the criteria we're looking to much like criteria of what we are ourselves. So highly scalable business, not a bums on seats kind of, if you want to double the revenue, you need to double the headcount kind of business. We're looking for companies with high IP. A lot of it would be hardware and software focused. So companies which are operating on high margins like ourselves, all of those things. It's not easy, and we have been close a couple of times and walked away from transactions where it just didn't make sense to us, but it's something that we are actively exploring.
Okay.
And sorry, just the last thing to add, Mark, if there is any transaction like that, we'd expect most of the consideration to be in Droneshield stock as opposed to cash, because we'd want the target company to align themselves with us.
Oleg, if you've got some time, we're still just waiting on Teri to join us from NZ, so maybe we'll squeeze in maybe one more question while we're waiting for Teri to come across, if that's fine with you. And in terms of, you know, the margins on both sides of the business, I'm presuming that the software business we can say is going to follow typical kind of SaaS margins. I think it might be fair to assume that. But on the hardware side, you know, what kind of margins does that achieve if people are trying to like figure out, okay, well, the software bit is, we kind of much know it's kind of same across all industries basically for on the SaaS side, but on the equipment side, is it kind of low margin to kind of get in and then you make your money on the SaaS side, or, you know, is it its own real profit center on its own?
Hardware is a very high margin on its own, reflecting the high IP nature of the business. We don't publicly state the hardware or the software margins because we don't want the customers to start using that to negotiate the pricing with us. But we are very much in the market where we are price makers, not price takers. You don't have, let me give you an example. So something like Drone Gun Mark IV or RF Patrol drone detection product, there is nothing quite like those products available globally. So it's not like the customer is saying, well, you know, I can buy Droneshield or I can pay 10% less and go next door kind of thing. They are finely differentiated products. So as a result, we're able to collect fairly meaningful margins.
Okay, great. Oleg, I see Teri has joined us now. So thank you very much for coming back and giving us an update on all things Droneshield. And yeah, we'll keep it's been a busy 12 months, I think, since you were last on with announcements coming out. And it sounds like the next 12 months is going to follow kind of a similar path. So thank you very much. And I'd like to welcome Teri Thomas, CEO of Volpara. Teri, if you want to start sharing your presentation, I'll let you know when I can see it coming up on the screen.
All right, one moment. I apologize. I had a technical issue.
Okay.
And I was, oh no. I'm trying to get to it.
Okay.
Right. I don't use Zoom very often, so share screen.
Yeah, and then it's starting to
Can you
come
see it?
now. And it's just loading. Yeah, I can see the cover slide of your presentation now, Teri. So you need to take it away.
All right. Well, hello, I'm Teri Thomas and CEO and Managing Director of Volpara. Standard disclaimer, of course, that we have. And at a high level, Volpara is a disruptive healthcare software company that provides AI to analyze breast images and to provide the best detection, early detection, and even prevention of cancer. And a couple other things. We have FDA approved software as a service product. And it's actually interesting. There are a number of tailwinds right now. This is an area that's getting a lot of attention in the United States, which is our biggest market. And as a company, we've been focused on cash flow break even, and we're a year ahead of guidance on our progress of being able to get to that point. So this is the inevitable by the numbers slide. We've got contracted annual revenue of $27.2 million in this first quarter. We're driving to profitability. 97% of our revenue comes as a subscription. So we've got really good future visibility, yet a diverse customer base, meaning our top 10 customers only provide 18% of that contracted annual recurring revenue, and 65% of our contracts are multi-year. However, we inherited a number of those contracts through acquisition, which were annual as the standard. So the fact that we've gotten to 65 already over the last couple of years has been fantastic. Expect that number to get to 85 plus over time. As I mentioned, our purpose is saving families from cancer, although at some point in the future, we might add a couple other words, and cancer as well as other devastating diseases as we branch into areas like cardiology. And as a company, we balance out that really strong purpose with driving to profitability. And part of the way that we do that is focusing on the scale. So right now, cancer is a growing problem. And our goal is to really cover as many people as possible, including assessing people's risk of cancer well before they get a mammogram, and getting Volpara software into everywhere that does mammograms. These are the types of customers that we have. So we sell to mammography service providers, including a number of big imaging chains. Some of those are PE owned. Also, U.S. integrated delivery networks and hospital systems, including faith-based organizations and those that do ambulatory care. And then in the rest of the world, we're mostly focused on private mammography providers as well as national screening programs. And we've introduced internally and externally the concept of an elephant. And the elephants to Volpara are healthcare organizations that, when using our software, would generate $250,000 or more annual recurring revenue. So in that balance of purpose and profit, when we're working with the big organizations, the elephants of the industry, the leaders, that also means that we touch more women and we can save more families from cancer. It also has a nice side benefit. Our group annual, our annual revenue per account, ARPA, has grown 30% in fiscal year 23. We anticipate that that will continue on a nice upward growth as we focus on big organizations like those that are on the right. The other thing, we've got a majority of our customers still have one of our products. Now, what might be one of 3 or 4 different products, so it's spread pretty evenly, but there's also a trend for our customers to buy multiple products at once, and we focus on that with the elephants, with our goal of deeper penetration of the United States elephants in particular. So when we look at the United States, with that metric of over 250,000 annual recurring revenue, we've got about 21 elephants that are in that revenue band, and about 220. I think that number is actually a little bit low because they're all different types of elephants, and this is our traditional integrated delivery network or imaging chain model. And so we look at an enormous amount of growth potential in the elephants in the United States, our biggest market. Taking a step away from the United States for a second, we do have a nice presence in Australia, including both some of the biggest privates, but also growth in the public, like Breastscreen Queensland. Breastscreen Victoria just signed a contract with us last quarter. And we've got some nice positive changes related to reimbursement for MRI, which is a follow-on to breast density. And so in Australia, more and more women will be informed about their own risk of cancer and the composition of their own risks. And we are working on bringing risk calculation, even pre-mammography, to Australia. And we'll have more about that in the future. So strong revenue growth as we've got. I know my presentation, I don't have a lot of time, so I'm going to skip over a couple things, but point out in the upper right-hand corner, you can see TCV, 87.5 million. If I didn't put a little break there and allowed my bar chart to go off, it would go off of the page. But the thing about that is nice that we've got great visibility. This is the contract value as we sign more and more multi-year contracts. We do have growth across our 3 core product streams. So analytics is one of our strongest products. It's got a very strong return on investment. It's very modern technology. It's won a design award. And the big thing is it saves our customers time. So there's really solid ROI on that particular product. And our density product is part of Scorecard, often deployed with analytics. Our patient hub automates reporting of mammography across a mammography center and generating the report for the referring provider and manages the workflow. That's in orange. And then risk pathways is a big growth area for us as well. This is the product that calculates someone's risk of getting cancer at some point in their lifetime, as well as other types of risk, like the possibility that they might have a genetic predisposition to cancer, including breast and other cancers. So you can see that we've got a nice distribution across each of these main products. And we anticipate continuing to have good growth, particularly in analytics and risk pathways, given the dynamics of what's happening in density globally, as well as risk in the United States. I mentioned in the very beginning that we've been driving to 3/4 of operating cash flow positive. So you can see that we started off fiscal year 21 with a big gap between what we were spending and what was coming in. And we've worked really hard to narrow that gap and are doing really well on our drive to profitability. Couple other things. We've really done a lot of work in our efficiency as an organization. We've reduced a lot of our general and administrative costs and reorganized some of how our product works. A lot of this was really going through a disciplined process of integrating the 2 companies that Volpara acquired in 2019 and 2021 and getting everyone on one platform and selling across multiple product bases. Moving on, some highlights that we did sign our biggest contract this year, our first contract that's over $1 million in annual recurring revenue with RadNet. I mentioned that we've won some awards. We've done some great collaboration. We achieved B Corp certification, and this is important for us, both from the perspective of being an ethical company that employees want to work for and are proud to work for, but it's also been really good for us as investors who want to give options to their customers of ethical investing. We are a squeaky clean company. We have a really good purpose. We have a really good strategy related to reduction of carbon footprint. We've got a really good gender diversity. And so going through the rigor of getting B Corp certification has been very good for us as we go forward and appealing to those that are interested in an ethical company. I'm quite proud that we've won 2 Microsoft Partner of the Year awards. Microsoft is a partner of ours and has been for years. However, we've amped up our relationship with Microsoft and they've rewarded us with both the Global Healthcare and Life Sciences Award. I went to Microsoft's headquarters 2 weeks ago and received that award. And then I'm heading to Sydney for the New Zealand Partner of the Year award later this week. We do some wonderful things, including working with them as a development partner on security. We created a new AI model to identify if someone's at risk of heart disease as a byproduct of getting their mammogram. And we do some co-selling with Microsoft and are exploring some other new ways that we can engage together. We do love our Microsoft partnership. We also are a founding member of Cancer X, and this is part of our purpose of saving families from cancer, contributing an incredible depth of knowledge of the science and being engaged with researchers globally about breast cancer and breast composition as a participant in this public-private partnership out of the United States. And then I'm going to depart for a second. I've been talking about breasts and I've been talking about cancer, but for those that are listening who don't understand, well, what in the world what does Volpara do and what does it relate to cancer? We started the company based on Dr. Ralph Heinem's work at Oxford University on a physics-based volumetric analysis of breast tissue to assess the breast density. And there is a categorization process called BI-RADS where you figure out is a breast tissue primarily fatty, which is the A, or extremely dense with a lot of fibroglandular tissue, which is D, or somewhere in the middle, B or C. And about half of women have some dense breast tissue, and up to half of breast cancers are actually missed in dense tissue. So when someone uses our software, a radiologist will look at the PACS images, what you see on the left, and then they'll also look at our characterization of breast density, which is at the top. In this case, it's 9.9%. So it's a fairly low C, but it gives you a very precise analysis of that tissue. And we can pull it together with lifetime risk score, in this case, Tyrer-Cuzick 8. The biggest factor in lifetime risk of breast cancer is breast density. So that 14% is informed by that 9.9% above it. And then we also have software that can assess the quality of that mammogram. Was the position done correctly? Was the dose appropriate? Was the pressure or compression appropriate? So that the radiologist knows how well they can rely on the quality of this image. And then they report that information to the referring provider and increasingly directly to women. In the United States, the Food and Drug Administration has now mandated that anyone who does mammograms needs to inform women of their breast density. And the interesting thing is, if you look at this graph in the upper right, it's a traditional kind of bell curve. And the FDA ruling states that you need to tell somebody they're dense, which would be C or D, or they're not dense, which is A or B. But you note the highest majority of women, the highest percentage will actually be right on the line between B and C. And so having a very, very precise measure of breast density can give the provider confidence that they're picking which people should be told non-dense and which should be told that they have dense tissue and be potentially referred on to get further assessment. Also, when you pull in hereditary risk, it's really, really important that women be sent on for appropriate additional testing. So the fact that breast density is the most common risk factor, but you put that together with family history and other lifestyle factors, and this is really the combination that saves the most people from cancer and also reduces the maximum amount of false positives, which means women that are sent to get further testing and are concerned they might have cancer when they may not be that high of risk. And so we at Volpara have gone even directly into educating consumers, and this is an area that you'll see more growth for us going forward in the future. And then educating technologists, educating primary care doctors, providing tools for clinicians to make sure that they understand what they're looking at and can provide the best quality possible. In this case, this is part of our analytics product, and we provide feedback about the quality of the image done objectively. Is it perfect? Is it moderate? And then on the job, at the moment, training, including little videos to help people learn how to better position and how to do the best quality mammogram, which saves time in terms of the reduction in inadequate images. You can see from Virginia Mason, 37% reduction in images that were insufficient to be able to read the mammogram, but also 60% reduction in time spent searching for cases. This is us automating necessary reporting that healthcare organizations in the United States need to do and enable them to be able to continue to do mammograms. It is one of the most regulated parts of the industry, and we automate some of the very heavy lift associated with the reporting necessary for that accreditation. And this is also an example where you can see target compression and quality of images. Above the line is before using Volpara's analytics product, and below the line is that improvement in technologist quality by giving them that feedback about the work that they're doing. Now, I mentioned earlier, it's not just breast cancer. We provide multiple models, including endometrial, ovarian, colorectal, pancreatic, lung, and we will likely add more of these in the future. And the good thing about this is a lot of the questions in here are not related to the image, and you can actually assess someone's risk of cancer at any age. And so what we found is that there's actually an enormous amount of potential in educating providers as well as individual people about their risk of cancer and giving them a personalized plan to ideally catch cancer at the very earliest stages, or in some cases, even prevent cancer by putting people on chemo prevention or prophylactic mastectomy if they're identified as carriers of BRCA or other genetic mutations that give them a high risk of cancer. Now, switching gears slightly, we do have a really strong science and innovation team. So as I mentioned, going into the area of cardiology, BAC is breast arterial calcifications, and BACs have been shown to be an indicator somebody might be at risk of a heart attack or heart disease. And so imagine going in for a mammogram and being told, we've assessed your risk of breast cancer, but we also think you ought to go see a cardiologist. Heart disease kills about 10 times the number of women that breast cancer kills. So what could be an incidental finding could be life-saving for some. And so this is a new algorithm that we've worked with Microsoft to create, and it's now in the hands of researchers, and we'll work through the process of getting eventually submitted to the FDA as a new product. Now, interesting for us, there are a number of tailwinds and regulatory pressures that are quite positive for us. The NAPBC, the National Accreditation Program for Breast Centers, has made a new recommendation, in fact, a requirement for accreditation or renewal of accreditation to have a risk assessment program in place. And Volpara is well positioned to support these organizations, both with the technology, but also the expertise on how to create these programs. So we've got a new professional services offering, and we've hired people who've set these programs up to actually help our customers with the people and processes associated with the technology to maintain or get this accreditation. Also, I personally am on a mission for all women to know their risk of cancer as early as possible, ideally at age 25. And the American College of Radiology has published new guidelines also supporting that recommendation. The United States Preventative Services Task Force provided their first update in a decade, and while it's open for comment right now, they lowered the age recommended for women to get a mammogram from age 50 to age 40. This is what the CDC looks at. This is something that gets a lot of international attention, and this is actually a reflection of the fact that breast cancers are being diagnosed at earlier ages. And when people are diagnosed with breast cancer in their 40s or their 30s versus in their 60s or their 70s, those are often much faster growing cases and much more important to be caught early. So that's huge for us, and it's huge for everyone who's in the mammography kind of business. And then, as I mentioned, the FDA ruling requiring women to be informed of their breast density will have an impact in the United States, but we've also seen it have an impact in places like Australia, as the private providers like IMED are now informing women of their density, and we're seeing this also appearing in the public programs. We're also seeing a lot of interest in Europe in terms of engaging with women, understanding both their risk and their density. Now, I was surprised. I was in the United States 2 weeks ago, and I turned on the TV to listen to the news. I was about to go get breakfast, and this person on the right, Jill Martin, she is a 10-time Emmy Award-winning newscaster who told her story of being diagnosed with breast cancer. And in particular, she talked about thinking that she didn't have genetic risk because her mother was tested and her mother was not a carrier, but it turned out her father was. She actually had a mammogram, which she was told was normal, but she had dense breasts. She went in for further on testing and found out that she actually is not only high risk of cancer, but actually has breast cancer. And she tearfully shared this with the nation on national TV. And then the Today Show and the network that carries her put more information online. when Katie Couric, also a well-known newscaster, came forward about her breast cancer diagnosis and the relationship of breast density to her diagnosis, that's when all of a sudden there was a significant amount of government attention and the FDA ruling came forward. So having Jill Martin a year later talk about her situation on national TV, we think may end up being a big boost to risk assessment as well as genetic testing. And that's an area where Volpara plays, that we gather the information, we send the information to the genetic testing labs that can support them getting reimbursement for that genetic testing, and it provides a revenue stream for us. So my last little bit, we've got, as a company, a lot of interesting growth, the new tailwinds in those industry trends that I just brought up. Even if we did nothing, we've got some really nice growth, but yet we've got opportunity to continue to cross-sell within our install base where the majority of our customers do not have our full suite yet. We have the ability for us to expand risk outside of mammography, even into new customer types, expanding into other types of risks, including cardiology risk, into other cancer models. And we've even announced in our last quarterly report that we've got a new product coming out called Quiver. And then I look at the disruptive technology side of things, particularly after spending a couple days with Microsoft and looking at the incredible potential with generative AI, leveraging new models to be able to speed up what radiologists do or take work off of radiologists. This is an area where there is absolutely enormous potential for us and for others to be able to improve an industry that is very much hurt by not having enough radiologists and backlogs of women that want to get screened but can't because of not enough staff post-COVID. So we're excited about the possibility as a company and excited about our growth possibilities in the future. Any questions?
Thanks, Teri. I might just jump in with one or two here. If we go back to the kind of start of your presentation, when you talk about the elephants, when Volpara is trying to get in the door with a new one, maybe not upsell an existing customer to more your product suite. I mean, who are your main competitors that you're coming up with, or coming up against, I should say, when you're trying to they've put a tender out, or you're going to maybe cold call pitch them? Who do you come up against in terms of competitors to land one of those?
Yes, great question. One beautiful thing about Volpara is that we have few or no competitors who actually do everything that we do. So we have competitors who do risk, and they may be one of them focuses heavily on genetics, but they don't do anything with breast density. They don't manage the workflow of mammography. They don't do any of the quality analysis or the training for the technologists. So if somebody is very interested in risk, for example, as we reach out to the NAPBC centers that need to have risk programs, for them, our value proposition is really clear that you can use our software to run risk without slowing people down. So we've got an integrated risk that works with the electronic medical record. We've got some really nice flexibility in deployment models, and we've got that wraparound program that can set up an entire program beyond just the technology and the people and processes. Whereas if it's a healthcare organization that is focused on mammography, for example, one of those big imaging chains like RadNet, for them, when we go in, we've got a very strong value proposition that we can calculate out to dollars and cents on time savings for automating the reporting, as well as potential increases in follow-on volume of MRIs and ultrasounds for people that are identified as high breast density and need further testing. And for them, it's interesting, when you use an objective assessment of breast density, then there's not concern, wait a minute, are you just sending people in and saying they have dense breasts so that you can justify more MRIs? So we've got a couple really strong value propositions that can be appealing to the CFO level, as well as the clinic manager level, and then even the marketing person. How are you differentiating your healthcare organization from your competition? We have high touch things that can show that you care about an individual and can provide them personalized care without the effort of the individual doctor having to think about how to put that together.
And then
Makes sense.
Yeah, thank you. And then just on the restructure, integration, cost optimization that you talked about, as that has kind of come through in the last 12 months, is that now concluded, or should we also see through FY24 kind of further cost optimizations and stuff coming through, or is the kind of base set and now it's like about landing the elephants?
Yeah, I think that the base is strong. We've done a lot of restructure and a lot of work in operational improvements post acquisition of those two companies, and our operations are in good shape. There's no CEO, I think, that's truthful to say there isn't more work to do. There's always more work that can be done. However, I don't see further restructures or further cost-cutting measures necessary, and right now we're on a path to growth.
And then just with the final question, because I know we're just coming up on time, R&D. How do you think about R&D? Just given you're on that kind of profitability nexus, do you think about a percentage of revenue, or is it an absolute budget number at this point in time, and it might turn into a percentage of revenue at some, that you'd like to keep it consistently at? Maybe just talk through that, especially as you mentioned a few times, possible new products and working closer with Microsoft and AI potential capabilities in the future.
Yeah, from an R&D perspective, it's this is a fixed price. This is our team at the moment. And we've got our science team that's got a docket of work that they're doing. We've got an innovation team. We've got innovation within each of our product teams. And what we've done, though, is adopted a pragmatic framework where we assess where we invest our time, and we put a portion of our efforts into concrete value proposition where we can see this is exactly what kind of revenue this should bring in. For example, our new product Quiver, we looked at, all right, who are the users, how many are out there, what kind of penetration we think we can get, how much revenue we think we can get for this. The business case makes sense. Go, this is your team, they're focused on that, this is what they're going to do. We'll be debuting at least a preview version of that at RSNA in November and releasing that next year. And yet we've got some time that we keep focused on the disruptive innovations and what are the opportunities for us with our innovation team, with our partner Microsoft, to ensure that we aren't tied strictly to small additional steps to the current products that we have. And so, we evaluate different opportunities for growth in terms of big leaps, and are careful to make sure that we're doing this in a way that's not sacrificing our ability to get from a company that was spending more than we brought in to the point of being a thriving, profitable company. So we've got a nice balance, and we've got some really passionate, motivated, knowledgeable team. We've got some scientists that are working with partnerships globally that we expect will also result in some new revenue streams for us in the future.
Teri, we're going to leave it there because Hannah has warned me. You've got a pretty full day, so I'm gonna keep to my side of the bargain and not keep you too long. But thank you very much for joining us and coming back in and giving us an update on all things Volpara.
You are welcome. It was a pleasure. Take care.
Take care. And with that, I'm going to close this morning's event. And just a reminder to everyone, we've got 4 more companies presenting tomorrow morning, 9 to 11. So hopefully we'll see some of you at tomorrow morning's event. And thanks once again to Teri for joining us this morning. And with that, I wish everybody a good start to the week and a good Monday.